Welcome to another episode of C-Suite at the Open with TMX Group. My name is Delilah Panio, and I am the Vice President of U.S. Capital Formation based in Los Angeles. Today, I'm really happy to welcome a fellow LA resident, Max Smith, who is the CEO of Last Mile Holdings. Welcome, Max. It's so nice to see you.
Hi, Delilah. Thanks for having me.
Why don't we get started with you telling us a little bit about Last Mile Holdings, how the company was founded, and where you're at today?
Sure. So Last Mile Holdings is really a combination of a couple of companies. First, Last Mile came about through the RTO of Ojo Electric in October. And Ojo Electric, a separate rideshare company for electric scooters in the US. And then we subsequently purchased Gotcha Mobility, another mobility company. We closed on that transaction in February. At that time, we changed the parent public holding company to Last Mile Holdings, now trading under the ticker MILE, M-I-L-E. And Gotcha represents our consumer-facing brand, reaching mobility partners, university and municipal partners throughout the US. We currently manage 35 university contracts, 45 municipal contracts, have nearly 18,000 permitted vehicles in the US. 80% of our contracts are exclusive, which makes us a bit unique. And as a result of that exclusivity, we really drive superior unit economics.
Excellent. It's really exciting what you guys are doing in the micromobility space. So let's get into some of the investment highlights. What are some of the key things that investors should know about what you're doing, what the company's up to?
Yeah, so I think the most different approach that we've taken versus anyone else in the industry is pursuing a strategy of using broad product suite for exclusive contracts. Since we have pedal bikes, e-bikes, sit-down scooters, and stand-up scooters, we offer a complete turnkey solution. With that, 80% of our contracts are exclusive. We never pursued blitzscaling, which was raise more money than anyone else and launch in every city you possibly can. We're very thoughtful about our growth. We want deep partnerships that are long-lasting. The average tenure in our contracts is over 3 years. And that sort of really gives us an ability to partner, to become a part of the fabric of our community and deliver important mobility solutions. We've got about, if I look at our deployments today, we've got 4,000 vehicles now. We're going to double that in the next couple of months, bringing over another 4,000 vehicles. And one other thing that we've done just recently is hire a US investor relations firm, because we've got so much, all of our business exclusively in the US today. Our US investor base is really growing. Sooner, like it or not, I'm going to be an SEC registrant pretty soon with the US investor base. And so we're looking at potential uplisting on the US as well.
So on that note, let's talk about your listing on TSX Venture Exchange. So as you mentioned, you came to our market through a reverse takeover in the fall of last year. So explain some of the thought process as a US CEO raising capital in Canada, and why you considered this option versus going the more traditional route of private venture capital.
Yeah, so when I spent a good amount of time meeting with VCs, a lot of venture capitalists who had invested in Bird and Lime and other mobility providers in the space. And they all had the same opinion, which was you need hundreds of millions of dollars to launch everywhere on a global basis. And we firmly rejected that. It actually wasn't part of our strategy. And I think through the recent pandemic, you see most of those companies, they closed down, they shut operations, and they actually retrenched. We've never closed down a single market and never laid off an employee. So the strategy of thoughtful growth in markets that make sense was important to us. Going to a public route, there were a couple of things that we wanted. We wanted a platform to continue raising capital. If you're growing in this space, you're always raising money. It is a capital intensive industry. We do have great unit economics, so we recoup our investment, but we knew we wanted a platform where we have an opportunity to raise additional capital. In addition, we wanted a currency for consolidation. The market is a bit fragmented, And there are other opportunities to get companies similar to us right now, both in the States as well as internationally. So we have opportunities in Europe, we have opportunities in Australia with companies who've approached us. And I can tell you, we would not have been able to buy Gotcha if we didn't have a public currency to offer them. Gotcha is owned by a private equity company. They needed to sell just because of the timing of their funds. They didn't want to let go of all the upside. And so we're able to structure a deal which allowed them to take some chips off the table, but also gave them a public currency that they could continue to watch over time and see an appreciation in value. So for those reasons, it just kind of made sense. We had great partners who helped us through this process. We got it done quickly. That was in October. We did do a subsequent raise in February. We just announced a recent private placement again to fund our further growth and expansion. So it's playing out as we had expected as far as the ability to access capital, and that's why it made sense for us.
Excellent. Well, we look forward to when you graduate up to Toronto Stock Exchange and the dual listing. This is exactly the value proposition that we have for U.S. companies like yourselves. I know one of the questions that all investors are asking all companies these days is, how has COVID impacted your business?
Yeah, so COVID, COVID's tough. It was a big shock to us. We took a step back to make sure that we have policies and procedures in place that kept our employees safe, that kept our riders safe. We follow CDC guidelines, and we've really looked to bolster how we deploy and making sure that everything is safe. Now, during this period of COVID, we didn't close any operations. All of our partners said, can you please stay open? We deem you as an essential service. Micro-mobility, bikes and scooters, have proven to be a very safe alternative form of transportation. So COVID is a problem that we take very seriously. It's on a global basis. It's truly an unprecedented pandemic. Ironically, it's put some wind in our sails because in our marketplaces, people are using our product and using it relentlessly. And we saw dramatic growth even from April to May in the US, where we saw like people in some areas were coming out and just needed to get outside. And so our minutes of ridership went from 575,000 in April to 1.3 million in May. So really great engagement. But overall, I can see the difference. Like it's even, those rides are suppressed, but many people are using it, and they're taking very long rides as well.
Excellent. Thanks, Mike. This has been a really great overview. I guess as a last question I would ask, based on your experience as a U.S. company, what advice would you give to other U.S. CEOs that are looking to consider this marketplace for their growth capital?
Yeah, so I've had 8 exits before joining Mile during that period of time, and probably 40 acquisitions during that period of time. Angel investing, venture debt, venture capital, IPOs, everything you could possibly done. When it was brought to my attention that we were a great candidate for an RTO, I had no idea what that was. I thought I had seen everything. So, I would really encourage entrepreneurs to look at the opportunities on the venture exchange. We found it was an easier path to access capital, a very robust investment community of people who are looking for opportunities and growth opportunities. And it gave people, not only institutions, but that retail investor an opportunity to invest in some of these high growth companies. If you're not a limited partner of the Sandhill Road big VCs, you can't participate in these deals. So with us, we saw it reaching high net individuals who don't always have access. And then once you're public, it does give an opportunity for retail investors to jump in and continue to follow and support the company.
Great. Thank you for joining us today, Matt. We wish you continued success, and thank you for being part of the TSX family.
Thanks, Delilah. Really a pleasure talking to you.